How's it going, everyone? My name is Ari and I'm here with TipRanks. With Walmart reporting their earnings today, I wanted to dive right into the stock in order to determine whether or not it's worth adding to your stock watch list, or even if it makes sense for your personal portfolio and investment. Of course, we're going to be using all of the TipRanks tools for our analysis, so without further ado, let's dive right in. So just before we dive into some of these metrics, I think it's briefly worth talking about the company itself. Now, Walmart is among the world's largest retailers, and a matter of fact, it's the second largest according to Forbes. Now, what exactly does that provide me with as an investor? Well, confidence that it's not exactly going to be disappearing tomorrow, which in today's market is something that I'm actually really desiring as a longer-term value investor. Now, Walmart was founded back in 1962 and has since then managed to attract their customers with everyday low prices. They pride themselves on that, of course, but they've also had accessibility with over 4,700 stores across the United States. Now, that has surely allowed them to gain a lot of popularity and translated into overall growth. Their market capitalization has ballooned to $363.48 billion, with strong earnings that have a history of beating analyst expectations. Now, of course, with our current market conditions, whether it was the supply chain disruptions or even just consumers looking to reduce spending given the record high inflation that we all face, Walmart has surely felt the pinch, which has forced Walmart to actually take some actions, and they did so by announcing layoffs and even biting the bullet and slashing prices on anything that has not been flying off the shelves, whether it was clothing to more expensive items like electronics. Now, talk about shareholders growing ever so fearful. After such moves, we saw a massive sell-off. As of right now, Walmart, which was once trading at a 52-week high of around $159 per share, is now down around $132 per share. That's nearly a 17% change in share price. Now, does that necessarily mean it's a buy? No, not necessarily, and their PE ratio is actually rather high at 28.4. And on top of that, we can see that hedge funds are actually selling out of their position with Walmart, in addition to insiders doing the exact same thing, which is never a good sign. However, we do see some positive signs from bullish blogger sentiment to something particularly interesting that I want to take note of, which is website traffic. That has been on the rise, meaning more people have been clicking through to Walmart's actual website. Now, perhaps that is an indication of better days ahead for this retail giant. Now, as for where I personally stand right now, I'm not quite sold on Walmart just yet, but if I were a shareholder already and thinking longer term, I do see some upside potential, and so too do top analysts, for seeing a target share price coming in at $144.41 per share. Now, in the meantime, I would just enjoy Walmart's dividend, as it's coming in with a dividend yield of 1.68%. Now, before we conclude, I would certainly love to know whether or not Walmart is already in your portfolio, if you've been buying more shares of the stock, or if you've joined the list of those who are actually selling out of the position. Let me know down in the comments below, and until next time, thank you for tuning in.